Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best value investors, recommendations by the best of the best value investors out there. PROMOTORA y Operado INFRAE, ticker is PUODY. October 31st was a file-in by Flober, 926. Price at that point was $149. This is not a recommendation. Please inform yourself before investing into anything. This is only entertainment. Description: PINFRA, the company. As reference, please refer to VIC write-up made on PINFRA in 2010. However, new highway concessions have been incorporated since, and much cash has been generated and distributed in the meantime. We'll address that as well. In a nutshell, PINFRA is Mexico's largest and most profitable toll road operator, with two very profitable port operations and an asphalt plant as add-ons. The above mentioned write-up mentioned the great need for quality infrastructure in Mexico. Namely, Mexico ranks as the fourth country in the world with the most vehicle traffic per highway kilometer. We've come a long way since 2010, and infrastructure has been developed every year, albeit at a much slower pace than actually needed, and hence a great runway for continued growth in coming years. PINFRA is the largest toll operator with 27 highway concessions, followed by Ideal, Carlos Slim owned, with 15 concessions. In terms of highway kilometers, it ranks second to Ideal with 1,053 kilometers, but is by far the most profitable operator, 86% EBITDA margins, followed by Ideal's 80%, and has remained so over the years. Also, it has proven to be able to grow and compete for new concessions while being a very effective capital allocator. The only one of the big toll road operators in Mexico that consistently operates with a net cash position and that has made part of its culture to always operate while maintaining a pristine balance sheet. PINFRA started trading in the Mexican Stock Exchange in 2006, and in 2013 it did a follow-on listing PINFRA L shares. Since our last write-up, the following highway concessions were also added: Tlaxcala San Martin Highway 2010, Pyramides Texcoco Highway 2010, Oriente Package 2012, Michoacan Package 2012, Mexico Toluca Tranche the second, Marquesa Lerma 2013, Tlaxcala Puebla Highway 2015, Puebla Elevated Bypass 2016, Prieto and Jolobo Bridges 2017, Siglo XXI Highway 2018, Monterrey Nuevo Laredo Highway 2020, and New Veracruz Port Terminal 2020. When we last presented this idea to VIC, PINFRA had 13 highway concessions and one port operation. Fast forward today, and PINFRA manages 28 highway concessions and two port operations. Much public information is available, and we could expand on much more detail, but every investor will probably have a view on discount rates and how to value an asset like PINFRA accordingly. We mean this follow on to sort of a teaser and on our first write up 10 years ago, and hope to drive the point that this continues to be one of the best businesses we can think of. Extremely resilient during tough economic conditions, with a proven track record of both execution and profitability. Trading at a valuation that we truly believe to be one of the most compelling investment opportunities we can find today. We hope to make it clear this is a great asset that is trading at a ridiculously low valuation. The opportunity. Simply stated, we can't think of many businesses that enjoy the resilience and profitability that this does. Has such a lengthy track record of successful execution and profitability growth with such an attractive runway ahead of potential growth trading at such a low valuation. Mexico is on sale at the moment. We would argue most Mexican blue chips are at their lowest valuations ever and at their peak profitability. We've heard the argument that most smart money has simply lost interest in Mexico, and that appears to certainly be the case up to now. Our variant view, however, is that IF is sentiment and eventually flows reverse as most participants realize the bargains left behind. We look back to today's prices and find out they might have been opportunities of a decade. The flip side, at least in PINFRA's case, is that if that doesn't happen, we'll get back our investment in 6 years or less by dividends and buyback. buybacks. We like the odds here. Valuation today. It is our view that one of the better ways to measure potential returns on infrastructure assets is through the use of implicit internal rates of return. To be clear, at this moment, all of the infrastructure companies in Mexico, airports, and train operators trade at double digit implied IRRs. As a side note, would also we would encourage interested investors to delve into deep into GMXT, Grupo Mexico Transportes, Mexico's leading train operator, which we believe to be also a great business trading at a very attractive valuations. But let's skip to the point. Our view is that PINFRA is trading at fire sale prices. PINFRA L shares trade at a current implicit IRR of 42%, whereas PINFRA odd shares trade at a 24% implicit IRR. We know that every investor will have different discount rates for their respective valuation models. We want to drive the point that this is an asset to spend time on because, regardless of most scenarios, it is on sale today. Our future value for PINFRA is 280 pesos per share, almost a double from today's prices. Is $208 pesos. I'm confused. You wrote both down. Why now? PINFRA just reported their third quarter last week. Numbers were great, as expected. Revenues up 11% year over year, EBITDA up 18%, net income up 10%, free cash flow generation of 15% annualized, net cash position majority of $8.8 billion MXN. When such a high quality asset trades at a 15% cash flow yield, has close to 18% of its market cap in cash, and trades at a TTM EV EBITDA multiple of 5.8x, 3.3x EV per EBITDA on PINFRA L, we think it's time to look again closely on this company and figure out if you want to own a share. They also just announced they've bought back $1.25 billion dollars of MXN in the quarter and $4.3 billion dollars MXN year to date, a whole 8% of shares outstanding, while also announcing a $3 billion dividend for 2022, a 6% dividend yield, a 10% when in PINFRA. Let's remind ourselves that this asset that now trades for roughly 6x EV EBITDA not long ago traded at 14 to 15x. And this is not the case of multiple compression because of growth disappearing, not by a mile. This is, in our opinion, is pure market mispricing. Worst case scenario, in our view, is to own a great asset that between buybacks and dividends will be paid back to us in 5 or 6 years. Best case is to get a multiple re-rating and continue to own this asset for years to come. Catalyst: ongoing buyback, 8% of shares outstanding to date, 6 or 10% dividend yield depending on share class, and Mexico re-rating less optimistic on this perhaps. Thank you very much for tuning in. See you next.